Before we dive into today's podcast, I just wanted to say a big thank you to our new sponsors of the next few episodes, and that's SumSub. If you haven't heard of SumSub, they're a global AML, KYC, and KYB solutions business operating not only here in South Africa but across the continent. Great business, great group of people. Got to know them really well over the last few months, and a big thank you to the entire team for sponsoring Talking Success and the next few episodes. So if you are looking for any compliance solutions around AML, KYC, KYB, give the guys at SumSub a shout. You'll be in safe hands. So thank you very much and enjoy the show.
Welcome back to Talking Success. We're back to our roots today. We're going back to the world of payments. Now, clearly, payments is the biggest part of FinTech. I think it accounts for about 60% of the economy when we look at the industry. And I'm joined today by Nikolai Barnwell, who is the CEO and founder of pawaPay. We're going to delve into the world of mobile money, and obviously, I'm sure we'll give mention to M-Pesa because you can't talk about mobile money in Africa without mentioning M-Pesa. But we're not going to focus solely on that and on the innovations that's happened there and has kind of really catapulted certainly the fintech industry in Kenya and other parts of East Africa. But we're going to try and give a bit more of a holistic view in terms of what's happening with mobile money, where adoption has been, maybe where adoption has perhaps been expected but hasn't hit the mark for whatever reason. And there's no better person to bring onto this show is Nikolai. So Nikolai, listen, welcome. Thanks so much. I know how busy you are, and I know you're sat in Hout Bay at the moment and probably itching to get to the sea. So I'll keep this straightforward, and we'll keep it to like half an hour. But great to have you on board.
Easy.
Thanks so much.
No, great. Thanks for having me. I was excited. Always love to talk about mobile money. So any chances, I'll jump on it.
Amazing. Well, listen, before we delve into the world of mobile money, let's just talk about you, and let's talk about what you guys do at pawaPay and how you guys came about and where you fit within the market. So do you want to give a quick intro?
Sure. So I think to understand kind of where we are today, I'll just jump a little bit back and talk about where we came from and where I came from to kind of get the full context. So I'm originally from Denmark. I've been a Kenyan resident since 2009. I came to Kenya the first time in 2007, which also happened to be the year M-Pesa launched, and was also the year that the iPhone launched. So kind of the birth of the smartphone revolution, the birth of mobile money, and the birth of my tenure in Africa, kind of all centered around 2007. Spent the first couple of years in Kenya with another Danish entrepreneur building a seed accelerator called 88 miles per hour. We kind of saw all this like exciting things happening with mobile internet, saw like, oh, there's something cool going on here, this mobile money thing, like maybe there's something here, like there's going to be some businesses being built here. How do we get to know about that? How do we get into that? And the best way to do that was to, hey, let's set up a seed fund, let's raise some money and make a bunch of small, very early stage investments into entrepreneurs, kind of get understand like how are these businesses going to be built and what kind of problems will they face when they grow. So we did that in Kenya, South Africa, and Lagos. We ended up investing through 88 miles per hour. We invested in just about 50 companies over a handful of years, all very early stage startups. Average ticket size maybe 20,000-30,000 euro, dollars, whatever. Like small tickets. Yep. Obviously, that was very early. Obviously, that's a really difficult space to pull off. So the success rate there was very well. I think in general, the success rate in very early stage venture capital is pretty low. And obviously, it was a very difficult space. But we did have some smaller successes. We took one company that was kind of like a music clone public on Nasdaq's True North in Copenhagen, which is like a Nasdaq's Nordic small cap. We did end up out of this. The stuff we learned from all the things that were not going well, we kind of tried to incorporate, and we ended up kind of investing / building a sports betting company out of that ourselves, and that sports betting company ended up becoming quite large. So obviously, when you build a sports betting company and you're going into multiple countries, obviously payments become really, really interesting. So actually pawaPay was born out of that sports betting company, where at some point we were running into so many issues with getting payments to work, with finding reliable third-party providers across the continent that had the scope and the quality that we needed. So we started building it in-house, and then at some point we kind of looked around and be like, oh, there's maybe a good idea here to take this out and build a standalone company and then service like the wider industry, because the stuff that we're building, surely a lot of other people are facing the same problem. So this can be an entirely different company. So we hived out pawaPay out of that old company. Two completely different legal entities. There's no kind of there's appropriate corporate governance. There's a complete Chinese wall between them, but it is built on the experience from there, and it is built on the kind of deep experience of building companies and investing in companies through the past decade and a half on the continent. So that's kind of how pawaPay came across, and that's kind of how I ended up being the CEO of pawaPay.
We'll come on to pawaPay maybe in a bit more detail shortly, well, definitely shortly. But can we talk about some of the challenges you faced then? So you had the sports betting company, specific challenges around payments. What were they? Where did you see this sort of opportunity to carve out pawaPay into its own entity?
Sure. So, I mean, there's many, so this is going to be a really long conversation. But in short, I think one of the main things is you don't have to interact a lot with the mobile money infrastructure to understand that it is a very difficult infrastructure to build stability around. The MNO's technical infrastructure is quite unreliable. There's a lot of downtime. There's a lot of, because it's growing so fast, and anybody who works in, people who don't work in tech think like, whoa, what's the difficult thing? You just switch it on and it keeps running. But like the reality is that's not how tech actually works. Like it requires an enormous amount of maintenance. And as you're building up and you're scaling, a country like Tanzania over the last couple of months, still, quite high saturated mobile money from a penetration point of view. I think there's 55 million mobile money wallets now live in Tanzania. And still at this level, they're adding 1 million new wallets every single month. So to build an infrastructure that can handle that type of scaling is not trivial. It's actually quite difficult to do. And you have to kind of build the plane from a tiny little, a glider or like a Cessna 172 or something into like a full Airbus 380, like while you're flying. It's like it's a pretty incredible engineering feat to be able to pull off without crashing. Because luckily, it's not always lethal if you crash software, but it can be lethal for your business if you're not clever about it. So some of the issues that we saw was the stability around the mobile money. It was very difficult to find good service levels around what that meant, because what we saw was like, we're okay with working with the system being down sometimes. Like it's people's expectation. If you spend a lot of time in Kenya, sometimes M-Pesa is down. And what do? Well, you say like, hey, I'm sorry, M-Pesa is down. Like, let me take your number. I'll try again in a couple of minutes. And it sounds crazy to people from other places in the world, but it actually works. I mean, you can even, like, if you're in a taxi and M-Pesa is down, you take the guy's number and you pay him 10 minutes later, and it's okay. Most people are good actors, and the system actually does work like that. So it's okay, but you need to have like the expectation management. So you need to know, okay, when it's down, I need to understand that it's down. I need to know how long can I expect it to be down, and what are the repercussions on my payment. So one of the issues that we found was, because the infrastructure is so unstable, it has a big impact on reconciliation and the kind of callbacks. So you getting the status of a payment could be a huge issue. So for instance, you would have people who would make a payment, they would have a successful receipt from the MNO, but because of the instability in the issue, the MNO didn't tell the payments provider appropriately that the payment was successful. So the guy is sitting there. It's 5 minutes to 4 on a Saturday afternoon. Chelsea is about to play Bayern Munich or whatever, and he needs to make that bet, and he has the receipt that his money has left his phone, but it's not reflecting on his betting wallet. I mean, if he was going to bet on Chelsea and Chelsea wins and he didn't get his money in his wallet, that is an incredibly frustrating experience for a customer. And they literally feel like you stole their money. They literally feel like you took it out of their pocket. Equally worse, if you win your money, you want to have the money because you don't trust anyone. Like, there's so much fraud, there's so many bad actors, there's so much just bad business and poor competence that you need to be able.
So Jeff, I get the impression though that if that payment fails, just using your example just now, I'm probably as the consumer, I'm probably not going to be blaming M-Pesa. I'm going to be going to the company that I'm actually making the transaction for and going, why didn't you sort this out? What happened? Why didn't you want? I want my money. So you're kind of relying on infrastructure that perhaps isn't as stable as it needs to be. But you're taking the brunt of kind of the consumer issue, and then obviously it's a very competitive market. There are numerous different sports betting companies out there, and for one person to actually sort of leave and go to another one, actually, it's a very simple process. So I guess that was affecting kind of top and bottom line for you guys at that stage within the betting company.
100%, and that's exactly you're bang on. That's exactly what we zoomed in on. Is like actually getting payments functioning is a really strong competitive value proposition
Yeah.
for the end consumer in this space that is quite homogeneous. The odds are fairly similar. The product is fairly similar. It's a lot about brand. Do you trust the brand? Do you get your money? How quick does this work? So we zoomed in on that, and this was stuff that we couldn't find probably dealt with third parties. So we had a number of different partners across the continent, and we kept finding like scaling the business ran into these issues of payments. It became like a really big block to like how fast and how big can we grow this company. Well, we continuously have problems with payments. So that's kind of why we started being like, hey, look, maybe we should just try and see if we can build it better ourselves. And then we started with that very strong experience of like, okay, if we were to build it, all these things that we don't like, why don't we just build it in a way so we can fix those problems? So we try to build from the beginning, for instance, things like reconciliation, making a stable API that the merchant can pass on to his consumer with the very, very transparently. So they always know exactly what's going on in the system, and making it very narrow. So we don't work with any third parties. We only work directly with the telcos and the mobile money wallet operators. So we don't have this like Chinese whisper of like, well, I need to call my partner here and I'm using these rails here and these rails here and these rails. No, we need to own end to end the entire solution from the initiation of payment up to the settlement, to make sure that when something isn't working smoothly, I can at least like control the experience from the merchant, and I will always know inside what's going on.
Okay, makes complete sense. So we've spoken about Kenya, and obviously everyone knows about M-Pesa. It's the kind of the darling lovebird of fintech, and it's an amazing feat. Let's talk slightly broader though, because you operate in lots
Yeah.
of countries. It's not just M-Pesa, right? We're not just put all our eggs in one basket with Safaricom, right? You
Yeah,
have
yeah, yeah.
Money, we've got Orange, we've got loads of different players. So I think one of the challenges over the years, and perhaps this falls into why you guys built pawaPay, was the interoperability. It's very difficult to move money from one mobile money provider to another. I don't know whether sort of there's plans in place to sort of resolve that. But was that a challenge for you guys? So when you are looking at building this payments infrastructure, to be able to accept, or the acceptance side of multiple different wallets with multiple different MNOs, I guess, I assume, creates a lot of complexity.
Oh, I mean, totally. But that's exactly, again, spot on. But that's exactly the value, right? Like my value is I go to a big international global merchant and I say like, well, if you want to operate in Africa, you don't have to, but if you want to operate in Africa, you really need to think about mobile money, because most places on the continent, and most of the 1 billion people that live, 1.5 billion people that live on this continent, from them, a digital payment experience is really mobile money. So you need to think about mobile money. Okay, if you get over that hurdle and you want to go into Africa and you accept like, okay, I need to have some kind of plan for mobile money, there's really only two ways. Either you go and you make an integration with Orange in Cameroon, and Vodafone in Tanzania, and M-Pesa in Kenya, and Airtel in Zambia, and you have to go around and do about like 150 or something to cover the entire continent. Either you have to go and do that work, or you go to someone like us. And of course, like, we're not the only ones in the space, but you go to someone who's done all that hard work, and then we can you can make one integration to them, and then let them do all the annoying hard work in the back. The nice thing is that it scales quite nicely, because it's kind of, there's a few type of industries where that sort of aggregation of flows makes sense. And it's kind of when you have a lot of merchants on one side and you have a lot of wallets on the other side, it makes sense for both parties to have like a central switch. It makes sense from the MMOs, the wallet operators, so the Airtels, the M-Pesas, the Waves, etc. They don't really necessarily want to go and have 10,000 merchants that they have to deal with every single time there's an issue, or every time there's a call, or every time something. They don't necessarily want that. They're quite happy with being like, hey, we have one solid provider that we trust. That's the guy we can go to for all our technical, all our compliance, everything, and we just need to maintain that one relationship. They like that.
Yeah.
And from the merchant's perspective, of course, much better to have one integration if you trust that it's a technically competent partner, than having to go and do, as I said, like about 150. So it's not a very big secret. I mean, it's not like some kind of stroke of genius, like, oh, nobody ever thought of this before. It happens in quite a lot of similar industries around the world, where like there's this kind of complex network, and you can create value for both sides by going in and doing the hard work. But it's hard work. I mean, it's taken us 10 years experience to build up all the integrations across the continent, and it's not something you can just it's not something you can kind of cheat your way through. Like, there's no other way. Like, you gotta put on your boots and go and fly around the continent for a good 5 years and make the connections technically, legally, operationally, relationship wise. Like there's no shortcut, unfortunately.
And I guess when you look at traditional PSPs, right, certainly operating on the continent, maybe more here in South Africa and in Kenya, there's big focus on e-com, right? E-com's obviously a big driver behind that, as is card present in retail. But where you guys are fitting in here is, I'll call it an alternative method of payment, because in South Africa it would be seen as an alternative
Yeah.
method. In Kenya or Tanzania or Nigeria, it's probably the primary source of payment, right? So when you're dealing with merchant, are you able to say to the merchant, I can give you kind of an omni-channel service? So it's mobile money as well as EFTs, which is very popular here in South Africa, credit card payments, etc., etc. Or are you guys solely focused on solving that problem around mobile money?
So I'm a big believer in, if you want to do something well, you really need to focus. And we can do mobile money extremely well. I think we have a very strong product in the market, but it's narrow. We can do mobile money, and we cannot do cards. So if you want to try and take cards in Kenya, you'll have to use another payment company, because that's not something that we can do. That of course is a trade-off, and it's like, depends on what your strategy is, what you think your strength is as a business. Some businesses and some leaders lend themselves well to kind of like a wide but quite shallow scope. Our business and our experience lends itself very much to, like, we have a very deep, very narrow but very deep scope. So we understand mobile money like very few people do. Across the entire continent, we can handle volumes like very few people can, but we cannot solve all the problems for everybody in the world. Like, if you don't have a problem with mobile money, or if you don't think you want to do Africa, then it's not a business that we should try and help with. And I think that works quite well for us so far. Most of the merchants that we speak to, they kind of go through different cycles, and of course depends on where they are. There's many different types of them, but they come to some kind of understanding, like, okay, if you're not in South Africa, you really need to consider mobile money on the continent. And if you want to consider mobile money, well, you have the choice. Either you can go to one provider, like the ones that offer all the different channels, or you can go to a specialist. And there's, of course, trade-offs with both. What we find quite a lot is that the merchants come to us from the omni-channel providers, because, of course, if less than 10% of your business is mobile money in 5-6 different markets, you're not investing the right resources into making that product better, and you're not inventing the right resources into reconciliation, settlement, bank rails, all the product in general. And that just means that your product suffers. As a business, you have other strategic interests and you have other strategic strengths. So then we get the blue chip companies that we're winning, like the big global merchants. They come to us after having battled with a kind of experience that just doesn't really work for them.
Yeah.
To then say, like, look, we will happily do you guys just for mobile money, and then we'll use the other guys for the rails. We also see increasingly we're working with those guys to handle their mobile money rails as a kind of base there. So they will be like, I'm not going to put any names on it now, but we'll have one of the big global guys, and they'll come in like, oh, we will do you for all the mobile money, and then we will go to the big global merchants, because a lot of the big global merchants, they do not want to have many different payment partners. They'll be like, well, I want Adyen. So if you want to do something with me, like, go and speak to Adyen, and then Adyen will go and I'm using Adyen because we're not working with Adyen. So that's a safe thing to say. Not yet, but if they're listening, would love to. But that kind of like infrastructure, right? So we also work as a base layer supplier to other payment rails.
And then in terms of the merchants, I'm not asking for specific names, Nikolai, at all, but give us an understanding of, are they all enterprise merchants? Are they all international businesses that are coming into or want to service, the continent? Or are they domestic businesses that perhaps are operating in Kenya but now want to expand into Nigeria or Tanzania or other countries? What does it look like?
All of the above.
Okay.
The beauty of the kind of payments industry is that it's such a broad, like, base level infrastructure, that it's really like anybody who wants to run a business needs to do two things. They need to build something and they need to sell it. Yeah. And increasingly in this age, like, if you're not selling it digitally, you're probably suffering. So for most businesses, they need some kind of digital payment channel in Africa that, to a large extent, means mobile money.
Yeah.
So we have a lot of global kind of enterprise level large merchants who have very high demands and are in multiple jurisdictions and need a kind of easy switch on, roll out, contractual wallet operation settlement kind of structure that we can give them. We do also have, of course, like payments is like that. I think by nature we have quite a long tail of small businesses from around the continent who just need working payments. And of course, from our perspective, and this is where I think a lot of payment companies, they find themselves in that decisioning. They don't make any financial sense. It just doesn't make any sense to have these merchants on. They're small. Payments is really a volumes game, and you need to realistically, if you're not doing $1 million a month in transactions, you're not really adding an incredible amount of value to my business. But the amount of businesses in Africa that are doing $1 million a month is like, you're doing really well. I mean, if I'm sitting with the other hat on and my business is doing $1 million a month, I'm pretty happy. I mean, that's a great business. But from the payments, of course, like you need much bigger volume. But the way we've looked at it is from like more of a kind of values perspective. We saw this problem. Like we really think it's a problem that needs to be solved. Like entrepreneurs should not be blocked from unleashing their potential because they just can't reach their customers with something as simple as payments. So we've been quite strong in our kind of the way we built our product is definitely an enterprise product, but we've continuously made sure that the door is open. So if you want to come in and you just want to sign up and you want to start doing payments and you're a legit actual business, you can go online in 24 hours and you can start taking payments from the whole continent. It's made quite simple, so it's possible. And then of course we make it more sophisticated for the enterprise customers who have quite specific needs, and that is of course the bread and butter. But we are quite keen on the long tail, and it's cool to see the long tail grow, because that's what gets me really excited when I look and I see all the little different colors in the graph with all the small businesses that are growing. And one, it's more, of course, like it adds a bit of robustness and sturdiness when you have a huge diversification across countries and sectors. But it's also like it's nice because you see these guys and like, okay, if I'm making $5 from you, that means that you sent out $500 to the platform. And for a small entrepreneur somewhere just starting and fiddling around with some tech, something like that's hugely exciting.
Yeah, absolutely, certainly is. Talk about the sort of multi-jurisdiction side, because it is complex. Where we have on the continent exchange controls, there's transfer pricing, there's all of these regulations that actually make conducting business cross-border very challenging. Okay, how do you make that easier for your merchant? Because obviously, if they're accepting shillings or they're accepting rand or they're accepting naira or whatever it may be, how do you reconcile that for a customer? Because again, I suppose when you're enterprise customers, if they're sitting in the States or they're sitting in Europe, Denmark, or London, wherever it may be, they're going, yes, we've got like 17 different currencies here. How do we recon? Or do you sort of pass that back to them as kind of raw data, and kind of that they need to have a treasury department in order to unwrap and make sense of all of this?
It's a good question, because I think it's one of the things, like, especially like treasury and currency management across the continent, is one of the things that most people just don't really understand how complex and how difficult it actually is. Because if you come from a more developed market, you're like, well, the bank just works, right? Like I go to the ATM and I press the button and money comes out, and like,
yeah,
what's the problem? And if I want to send money from like Danish kroner to US dollar, like I just go down in the bank and I like, what do you mean it's difficult? Like, what's difficult about it? But of course, if you work in a highly fragmented, tens of different local currencies, all not particularly strong currencies, so a lot of volatility and a lot of kind of directional trends in the wrong direction. So you preferably don't want to hold them for too long. That becomes really, really difficult. So it's one of the things that we've tried to help and abstract away from the merchant. So we kind of thought of it again, like, okay, well, what would this look like in an ideal world? Not like what's possible, but in an ideal world, like what would you actually want? So the first level we did was we said, okay, on a country level, ideally, like merchants, they don't really care if you have an Airtel wallet or an MTN wallet or a Wave wallet. Like, you just care, like, did I get paid, right? Like, you don't care when I swipe my card. You don't really care what bank I have. You just want to get paid. So the first thing we did was we abstracted all that away. So merchants no longer have individual wallets with telcos. They just have a country wallet. So if you're a Pan-African merchant, like, okay, you have your money in Tanzania. This is your money in Tanzania. So we show all the values in local currencies. Then we have either scheduled payments or scheduled settlements or on-demand settlements, depending on what type of merchant it is. And there we settle in either local currency or we settle in hard currency. So of course the easiest is just like, oh, if you have Kenyan shillings, you just get it in your Kenyan shilling bank account. Like that's a very straightforward and easy settlement. Of course, if you're running a Pan-African business and you want to get settled in euro, then we have to settle you in euro. So then we work with liquidity providers, forex brokers, etc., to make those trades. It's difficult. It's possible. It's definitely. I'm not going to pretend that it's not a lot of work, but it is possible. And again, when you can do a lot of hard work that other people don't really want to do, you can create value, and they will pay you for it. So the thing is to figure out like where you're strong and doing something that other people don't really want to do themselves. And so that's what we do. The one thing that we run in mostly with that is for people who are not very well, kind of don't have a quite deep understanding of how the continent works. They will go on Google and they'll look like, oh, the Malawian kwacha. It says on Google that it's this rate. So why can I not get that rate?
Yeah.
And you have to kind of go through the explanation. Look, for most of these currencies, the rate that you see online, try and go down to the bank and say, I want $2 million and show up with that amount of kwacha. Like it's just not there.
Yeah.
So it doesn't matter what it says online. It doesn't matter what the banks say on the website. Like the reality of actually trading these currencies is a lot more complex, and typically the spread that you can actually find in the market is really different. It's possible, but it's just different. So it's again more about like expectation management and having proper conversations with merchants, making sure that they understand that if you are doing business in Malawi and you're collecting Malawian kwacha, it's totally okay. But getting that Malawian kwacha converted into US dollars that I can send to your bank account in Europe or in the US, it's possible, but you're not gonna get the rate that it says on Google.
Absolutely.
It's like no one will get that rate. So
and then
it's again makes it fair.
And I guess it makes sense completely from your enterprise customers, right? That they're going to have the infrastructure, the skills, the setup to be able to handle those treasury functions. But going back to your point, and I don't want to labor on this because I know it's not kind of core market. But if you are looking at SMEs who are coming on that want to accept mobile money. For example, if I'm sitting in Nairobi, I've got a Kenyan business and I want to transact, or someone wants to procure my services from Nigeria or South Africa or the US, whatever it may be. How do they do that? Is there some sort of dynamic pricing that the merchant is going to have on their site that says actually, 50 naira is the equivalent to X amount of rand, or is that kind of their problem? Is that a solution you kind of help them with? Or again, is that why you're kind of saying, look, we kind of want to focus on enterprise because we can add more value there rather than kind of the SME side?
No, it's something we largely leave up to the merchants to decide at all levels. So it's like if you want to charge people in Kenya, if you want to charge in Kenyan shilling, like you will have a Kenyan shilling wallet, and you can decide like what you're going to charge, and the price that you charge you can dynamically feed through the API. So you can just build in the way you want to do it. If you want to have it dynamically pegged to some kind of interest or some kind of exchange rate, you can do that. If you want to have it to kind of pegged to another currency, you can do that. Mostly people they pick like a price that's fixed from the market they're in, then they collect that funds, and then no matter where you're based, like if you're a Nigerian business and you're collecting money from Uganda and Tanzania and Rwanda, you'll just have those wallets. You can still be settled in naira. You can be settled in whichever currency you want. That's not actually the issue. The issue is typically more the expectation again of like, okay, like how big of a haircut will I get compared to what I thought I was collecting. So technically, it's a little bit tricky. Some countries are a little bit more tricky. South Africa is, of course, we're not in South Africa for various reasons, but that being one of them. Nigeria is always a little bit wobbly. Ghana is a little bit tricky, but most of the countries, it's difficult, but it's possible. So the experience that we're trying to give to the merchant is all of that difficult stuff is kind of, don't worry, we take care of that. Yeah. You use the API, you collect your money. When you want your money, you just tell us what currency you want and what frequency you want it, and I will give you that money.
Okay. I know you don't operate in South Africa. Okay, and I understand why. But let's unpack it a little bit in terms of why. Not necessarily why pawaPay doesn't operate in South Africa, but specifically why mobile money hasn't taken off in South Africa compared to other countries across the continent and other emerging markets. I have my own view, but I'd love to hear yours.
Yeah, I mean, I've heard as many stories about this as there are countries on the continent, but I don't know. I mean, there's many theories. One theory around, like there's already quite an established like banking infrastructure, that there just wasn't a big enough need that it was filling. One theory was that when they tried to do it, the bank lobby. This is my favorite one actually. Like the bank lobby pushed back, because the way mobile money, it really needs to be 100% liquid for it to work well. So you need to have a really vast network of agents. It needs to be like anywhere you are within 100 meters, you can convert your digital money to physical cash.
Yeah,
Especially in the beginning, you need that comfort that's possible for you to do. And if you don't have that agent network, it becomes much less appealing, and the value proposition
feasible.
drops quite a lot. So
Yeah, of course.
one of the theories that I heard was that when they tried to push mobile money, because obviously like the banks don't like it, they pushed back and put in very stringent regulation around the agents. So that was very difficult to set up an agent network, and it became like you had to have very 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 deep KYC on all the agents to be able to roll out the network, which became then like impossible. Which is not the case in most other markets, where pretty much anyone can sign up to be an agent like on the spot. I don't know if it's true. I haven't asked the guys if that's the reality, but some kind of combination of all of it is probably the reality. It just didn't particularly bite in this market. But the one thing that I don't buy is, I don't buy that it's because it's a very developed banking infrastructure. Because what I've seen, actually, very interestingly and completely randomly, so I'm from Denmark originally, and in the time that I lived in Kenya, about halfway through, so about 10 years ago, they launched mobile money in Denmark, and they launched it in it's called MobilePay, and they launched it as a kind of consortium of banks, where basically you link your phone number to your bank account, and then it kind of runs as a kind of an instant EFT of your phone number, and it has killed cards. It's killed cash and it's killed cards. And nowadays, like an enormous amount of payment. Everyone uses mobile pay in Denmark. You use mobile pay to pay for a little bit the same that you would do in Kenya. Anything from like public services to bread at the bakery to pay for taxes, like everything is mobile pay. And Denmark definitely had a very developed, sophisticated financial infrastructure. It was just, again, I guess credit cards is generally, I think, it's quite a shit technology. It's a technology that's at least like 50 years too old to be relevant for the world that we live in today, and it's expensive. So there's a lot of reasons why, if you have a very developed financial infrastructure, you could go many other ways. One of them is potentially mobile money. So I don't buy that it's because it was too sophisticated. There might be other cultural reasons. There might be like urbanization reasons. There might be like economic reasons for why, but it didn't bite yet. And it's true, like we've heard 2 or 3 times now that they've tried. There's another one always in the horizon, that they're going to give it another try, and it's going to come again. I don't know. Now you see it in Nigeria. Nigeria is getting very good traction, and people said the same about Nigeria. Oh, it will never work in Nigeria. Nigeria is a card country. It's a banking country. It won't work there. But it is. I mean, you've seen extreme growth in mobile money in Nigeria over the last 2 years.
I think what's interesting, I'm involved heavily on a payments working group, part of the FinTech Association of South Africa, where we're looking at alternative methods of payment, or new methods of payment. And there's a big focus at the moment around an interoperable rand-backed stablecoin, and how that would work within the ecosystem. And whilst it's not a mobile money wallet, there's a lot of similarities around that. Even PayShap, which we've had launched here for the last year and a half, maybe 2 years,
Yeah.
if you strip it away, and I'm obviously not getting into the technical detail, it's effectively a mobile app, right? Mobile money app.
Yeah.
People will argue me on that, I know. I've had this debate for the last year, but I think that there is room in the market here in South Africa for something like this. Now, I think it will look very different from Airtel Money or from M-Pesa or other operators, or Orange, etc. But I do think there's a model that could work. So it's going to be interesting to see over the next year, 18 months, how things transpire. But again, in a very, very heavily regulated country, when it comes to financial services, there are always these big hurdles to try and sort of overcome. But so it'd be interesting to see. I'd love to sort of get your view in terms of the future. I always ask my guests to get their crystal ball out and kind of look 5 years. I can't do any more than 5 years, because in 10 years' time, we probably won't even be humans, right? So let's take 5 years. Where does mobile money look like, or what does payments look like on the continent in your view? Again, just your personal opinion, not necessarily any of
Yeah.
your companies.
No, it's look, it's not a secret. It's kind of like what the basis that we built this company around. Like pawaPay is kind of it's a technology bet on a specific technology, which is mobile money. So the way we made that kind of cynically is so I look at, okay, you're right. You can't look more than, like, let's say 5, 10 years into the future. But if we're a bit ambitious, we say like, okay, what do I think the world looks like in 10 years? Okay, I look at, okay, what do payments in Africa look like? Well, let's start at the very top. There will be more people, almost like guaranteed. Like all demographic trends are pretty strong that there will be a lot more people. There will be in a demographic pyramid that looks like a lot of them are the type of customers that are quite tech savvy, quite young, quite like connected, quite, in the age gap between like 15 and 35, a huge explosion in the population. So there'll be more people. They'll hopefully be richer. I mean, again, you can never like really look in the crystal ball, but it's a pretty safe bet to say like, okay, well, the GDP on the continent in general, it's growing. GDP per capita is growing. Like generally, people will have, there'll be more economic activity. There will be more payments. There will be richer.
Yeah.
Pretty safe bet to bet that there will be more online, not less online. Would be pretty weird world if suddenly people would get less connected and less digital. So looking into that space, you can, okay, well, in 10 years, you have a payment space that is probably safe bet to get, like, it's quite a lot bigger. All the macro trends are kind of falling in the same direction. They're quite a lot bigger. Okay, so then what does that space look like? Okay, well, you have banking. Banking is a core infrastructure in all financial services. It's not going anywhere. And you still look today, as much as you can complain about banks being slow and doing the wrong things and stuff, all the biggest companies on the continent are banks. Like there's just, they're not going anywhere. So a big part of the infrastructure is going to be banks. There will be some credit cards. Depending on where you are on the continent, how aggressive you think Visa and MasterCard will have an impact. There will be some credit cards. Right now, it's like low single digit penetration across the continent as a whole. We're seeing mobile money grow much faster than credit cards. So how big that slice will be, that's your technology bit. That's kind of that's where you try and use the best information you have to predict the future. There'll probably be a little bit of crypto, or a lot of crypto, depending on, again, where you are on the continent and how inclined you are. Probably won't be 90%, given how crypto has generally been trending in more developed markets. It's chucking away at it, but we're pretty far from a world where everything is crypto. And then when we're looking at it, I'm thinking like, well, based on what I've seen in the past 15 years and what I'm seeing every day in front of my own eyes, I think the brunt of consumer digital payments will be mobile money on the continent, like the vast majority. The pace at which it's growing now in all the markets. I mean, we all heard the story of M-Pesa, but it's a little bit of a shame because it shadows over the stuff that's happening in West Africa right now, where it's absolutely like thundering forward, like 20-30% growth year on year across all metrics that you can cover in for the last 5 years, and quite quickly catching up to the levels that you have in East Africa. We spoke about Tanzania a bit before, like the sheer pace at which this is growing is just, we're looking at that and we'll be like, okay, well, if we have to just like, what's the most rational thing to do here? Okay, 10 years in the future, this looks like it's going to continue. There's nothing that looks to me like suddenly, like the population is not suddenly going to get 3 times richer and suddenly we all drive like, fancy cars and use credit cards. They will get a little bit richer. Hopefully it's all trending in the right direction. But if you've been around here for long enough, like things change, but they do take a quite long time to change. We were talking about maybe 2, 3, 4 generations for like really big, massive, like societal sweeping change, where you can talk about all these countries generally being like middle income countries. It will take a long time. We'll hopefully get there. So kind of like in a 10-year range, like it's like, well, these are the macro trends. This is what we're looking at, the technology. The banks are probably likely to bite a bit back at the mobile money infrastructure, but that's fine for us. We thrive in fragmentation. So we'd love to have more kind of mobile money type wallets around. So you have now the rise of like Wave, of OPay, of, the banks are getting a little bit more sophisticated about it. Not a big fan of cards, but it's again, like it's a pretty big infrastructure. So the way we're looking at it is 10 years from now, the payment space will be a lot bigger. Mobile money will continue to take the brunt of what consumer payments look like. So it's like, okay, well, if we just built for that, we'll probably be building in the right direction. So that's why, like, we're just doing mobile money. We think that's what makes sense.
Amazing. Well, let's hope inflation doesn't get the better of us, and it costs the same amount of money in Africa to buy a pint of beer that it does in Copenhagen. I'll never forget getting that
Yeah.
and going, how much?
Yeah.
Anyway, so Nikolai, thank you for coming on. Thank you for sharing all your knowledge around this fascinating space,
Pleasure.
mobile money. If people want to find out more specifically about your product and the business, best place to direct them to is the website or LinkedIn.
Yeah,
Where do you take clients?
Yeah, I mean, we've I think one of the things we've been least good at is making a lot of noise, because we've been quite focused on a small amount of quite large demand customers. So we're not so present online as I think we should probably be, but we've got a very well documented API on our website. Everything you need to do is there on pawaPay.io. Otherwise, find us on LinkedIn and reach out and chat. We always love to chat about mobile money. If you have specific things that you think are challenging with mobile money, we love to bang our heads at it and see if we can help.
Amazing. I'll put some links down here to some of the pointers that Nikolai's just made. But listen, thanks again. Pleasure finally meeting you. I've been kind of stalking you online for a couple of years, so it's nice to finally put a face to a LinkedIn profile. Listen, if we don't speak before, have a great Christmas. We're now, where are we, 28th of November, so you're in South Africa at the moment. You'll realise that in a week's time, that's it, stops. Everything just stops. So if you need anything done, do it now.
Cool.
Otherwise, you're going to have no chance. But Nikolai, listen, great having you on board. Wish you all the best for the end of this year and the future 10 years at pawaPay.
Cool. Thanks so much for having me. This was great. I mean, pleasure to meet you too.
Pleasure. Thank you very much.